Welcome to the Currency Index Market Report.
Morning guys, it's Rob Bastin, Currency Index with your midweek update for the markets. So overview of yesterday firstly. Sterling continued to lose further ground unfortunately as UK inflation levels dropped further and more than expected from last month. Inflation in the UK is now sat at just 1.6%, below the Bank of England's 2% target. And more importantly, this is further increasing concerns over their ability to raise interest rates anytime soon. Low inflation typically is combated with a rate cut rather than a rate hike, and so forth. So now it is seemingly more and more likely that the first rate hike will not be until sometime early next year. What this could mean in the short term is that the current negative slump that the pound is experiencing could in fact last slightly longer than first anticipated, so imminent buyers do be aware as rates could still get worse before they get better. The US dollar yesterday also continued its resurgence against both the pound and the euro. Their inflation levels came in the afternoon at expected 2% target level. And it is the US dollar that comes into focus again later today. The FOMC minutes will be announced at 7 p.m. this evening UK time, and this morning the focus is on the Bank of England. At around 9:30 will be announced whether any of the 9 members of the MPC did in fact vote for an interest rate hike at the meeting 2 weeks ago. If any of them did, we will likely see some support in the brief spike for sterling. However, this is not necessarily expected at this stage, but could be over the coming months. To further discuss how any of these could impact your currency requirements, feel free to give us a call, and as ever, I'll be happy to help. Thanks very much.
Visit currencyindex.co.uk to save money on your next currency exchange, or call us today on 0800 043 2623.